So, what's up, everyone? Hope you're all doing well. Let's speak a little bit about NQ, Nasdaq, and what's happening in here. As I spoke yesterday in the short video market review, I said that this level here, this in here, wasn't mitigated, that flip. Let's take a look at it. So this point in here and that point. So these two swings, we have a closer below, which makes this our zone to trade at the 50% and trade lower, which didn't happen, and we traded above, and I think remember guys, I told you like I was looking at this level in here. It was like 3 days ago, but it didn't happen in here. It happened after taking the high and this equal highs in here. This one and this one, they are literally equal. And after the flip in here, last high, last low, last low that brought the high, this in here. As you see here, we traded above, came back to the 50%, gave us a 1-to-1 in here, gave us another 1-to-1 in here, closed it above the zone, then breached that zone, which makes it invalid and makes it a flip. And you see we didn't tap at all in that flip after taking it here. Yeah, we did this, I think it's the 30%, not even that. After closing below, not even that. We didn't even reach it to the 30%, then we drop. And in here you can see that what happened is that we started respecting the zones that are making another low. So this one in here, tapped in, took this low, then came back at this in here. We wicked through the high of the zone, then traded lower, making another zone in here. We tapped in twice after closing below. Then we have this zone in here. After closing, first tap, second tap, then moving lower. We have this zone in here. I don't know, can someone tell me? So we traded at the 70% of that move after. I'll come back to that after. But here we tapped in almost the 50% and we traded lower. So now we have this zone in here.
As you see, after breaching that zone, we came back, we didn't even tap into the zone and worked our way down. So we're keeping this unmitigated zone in here because we didn't use that zone. So we'll use it for future price action. We keep that like this. We had this zone, tap in the after breaching the low of the zone, tap in 50% and trade in lower, and we have this closing below, then breaching the high, coming back, taking this SNDR that put price higher and took this zone. We took that, then we took this low again and we traded higher. So now we have this as our zone. So as you see, we traded higher, took this high, I think it was in here, yeah, we took that high. We didn't took this, but instead we mitigated the hidden S&D in here at the 50% and traded lower back to this zone. We took both of these lows and we closed it below the zone in here. So we're not using that to trade higher. Take this. So now what we have like on the overall picture, we have this zone from here to here. As you see, we came, traded below, we came, traded 3 times above the 50%, made another low in here. So now we're taking this zone as our last zone that brought price lower. So what we can expect is price to do this. So it will either take the low or use the zone here that put price into mitigation of this zone. So it can do this and go to this unmitigated zone in here. Alright, and also it can take the low and move lower to unmitigated zones or unmitigated flips. Alright, and delete this. So what I teach to the group and my friends is that when you have this trading lower, so this swing becomes our zone, right? We wanna see this, right? But the same zone can be used as a flip to trade higher, right? Then after that it can be used to trade lower. So the same zone, sometimes it doesn't work and does not deliver another low then it deliver a high, so it becomes our flip zone, then come back to the flip zone, mitigate the 50% or the 30% and trade higher, making another higher high. Then it will breach the low in here, come back to the 50% of the zone and trade lower. The same thing that happened here. Into the 15 minutes, so it could be clear. So here's the zone. This and this is our zone. We traded below, then traded higher, didn't mitigate even the 30% and made another higher high. We came back, took that low and came back to the 50% of the swing here of this zone and made another low. This is how you can use the same zone to trade higher and to trade lower. Why we came back to that level and we seen some reactions to the upside? Because simply we had this zone in here. Let me delete that. We had this zone in here. We traded below, so we're expecting price to deliver another low in here. Didn't happen. We traded above, closed it above, came back to the upper level of the zone, which is between the 0% and 30%, and we traded higher. So this flip in here is not mitigated. So it didn't mitigate the 50% before making another higher high in here. You see, we closed it with this candle, came back, then make another higher high. So it didn't mitigate the 50% before making another higher high. So we expect the 70% to be mitigated. Also, we can expect the lower part of the zone to be reached to, and sometimes it will take even this low. So what happened here? We came back exactly at the 70%. No, here we slightly tapped in the 70%, but we did in here. Then we moved higher. Same thing after tapping twice, making double bottom in here. We traded above and mitigated this hidden S&D exactly at the 50%, because as you see in here, we had first tap, second tap, but they were below the hidden S&D. So we tapped in and took these equal lows in here, or double bottoms, however you call it, and mitigated fully the flip zone in here. Do we have another flips or another zones that are not mitigated? Yeah, we have this one in here. We closed it above, tapped in twice, so we expect price to not respect the 50% and trade below here the 70%. So as you're entering the market daily, you wanna do this. You wanna mark up the zones, mark up the flips, and
if you wanna have more accuracy and more I'm not speaking about precisions, but if you wanna do well, is you need to go at least to the 15 minutes or the 1 hour. If you wanna use 1 hour is not for the intraday, but better to use the 15 minutes and mark up the major zones and major flips that are unmitigated, and you will see price trading between the zones, like from here to here and from here to here. So if we going to see that this flip didn't hold the price in here and put in another highs, we expect price to do this trade, maybe trade to the 50% to fool everyone, then go up in here and trade lower to mitigate fully the zone. This is what happened yesterday, but yeah, this is what happened yesterday. You see in here we have this flip, traded above, not mitigated the 50% before making another high. So every push that will happen at the 50%, you know it's fake, because we need to mitigate the 70%. What happened here at the opening, we traded exactly at the 50%, delivered to the extreme of the flip, then moved lower, and that's where people get trapped, because they say, oh, it's the 50%, so I'm going to take this trade and target these highs or make another all-time high, but it doesn't work that way. Price may do this, mitigate this flip, this zone in here, do this, then it will start ripping higher without mitigating any of these moves. So when you see this, doesn't mean we're bearish now, we're going to mitigate the zones that aren't mitigated, and we're going to use the flips. We're going to use the zones as a flip to trade lower. And mitigate the zones that are mitigated before trading higher. And same thing goes with this. This is a zone that will become our flip, and we're going to use this and this to trade higher. This is how it works, and as simple as that. If you do the right job to marking up the zones with the market structure, you will see that it's easy for you to get the bias and be on the right side of the market daily. Bini, is that good for you, buddy? I think I did this especially for you, but it is good for you. Sure. All right. So what's happening in here? So that was the Asian session where we mitigated this and traded lower. And now if we're going to trade higher, where price can go, we have this zone which is unmitigated. So if you see that this zone in here I'm giving you the bigger picture because that's how you should see. Then you will take maybe only this and use it as a flip to trade higher. But if we see that we have close below in here, then price trade higher, and close above these equal highs in here, trade lower to the 50% in here, it will take price to mitigate the zone. If we don't do that and we trade lower, you need to use that flip as a zone to trade lower to some zone that aren't mitigated. And maybe then we will see this, but you're not here to guess where the price is going. You're not here to think about how and where price is going to without having the complete understanding of how price operates. We did that with NQ. Let's see how it's playing. Go to, well, we're going to do like NQ, ES, Euro USD, and then gold. So for ES, what's happening here? So in ES we have, I think, this entire zone unmitigated. This entire zone is unmitigated since we left that and we didn't come back to mitigate it. So if we don't, if we're going to mitigate that level in here, we need to see that low taken before moving higher. And let's jump to the 50 minutes because this in here, there's some good price action in it. I'm going to take that. So as you see, we breached it once, twice, closed it above here. We came back in the upper part of the zone and start trading higher, making another higher highs. And you know that the 50% will not be respected, so you will monitor price action at the 70%. What happened here, we took that zone, we closed it below in here, so this will become our flip zone, and we want to see price trading inside that zone to make another low. Same thing that happened here. Traded here, and then made another low, closing in here. The reason I'm not really monitoring the price in here is that it's Friday and we may like have some consolidation, sorry. So yeah, price came back to this imbalance in here. At the middle of the imbalance, and we start seeing some bullish price action. Let's go to the 5 minutes. So we have the last zone that took price lower. It came back, it closes here, traded at the 50% and failed to reach to the lower part of the zone. And now we're coming back, taking that high at the 50% of the zone. We may take these highs and trade higher, maybe. So yeah, in ES, like you don't have too much too much like details on the price action. We just have like price doing this, then we're coming back. Maybe we'll do this same thing here, or do this. Let's go and see the XY before speaking about currencies. That's the range that we are trading in here. So we are trading here. We took this low and took this high, so this will become our flip in here. And since we traded above the 30% and made highs, we're expecting price to run below the 50%, and as you see, we traded at the extreme of the flip zone in here. Then we traded higher, took that low, that high, traded like at the extreme, came back, and we're moving up. we have another deliver from here to the extreme. Let's go. We may take these highs. Remember we had this void of price in here. We just step in once and then trade it lower. Maybe we're going to trade higher in here. We have price trading higher, coming back to the 50% to this zone, making another high in here, and taking also this high, coming back to this void in here, trading lower. And you can use even that, because this the zone that brought price lower. You can use that. As you see, we traded above the 30%, made another high, so we expect 50% to not be respected. And since we have this zone, we want to see the 50% here, which is at the low of that zone, that flip zone. Same thing happening here. This is the zone. We close it below, then we didn't respect that to make another low. Close it above, came back and tapped it exactly at the 50%. Why? Because we didn't trade higher, trade again above the 30%, then make another high. So here is a perfect mitigation at the 50% of that flip. And a lot of times the flips will give you like really good trades, one-to-one, or you wanna wait for the mitigation and you take that high, or you wanna wait for lower part and take that high. And this is something that is for the zones and for the flips, is that when we mitigate the 50% and make another high or low, a lot of times that low or high of the mitigation will be protected. So as you see, we traded and we perfectly mitigated the 50%, so that low will be respected. We may mitigate the hidden S&D in here at the 50%, which is happening here, but we won't take the low that mitigated the 50% perfectly. Like if you have like a lot of highs, you wanna see the 50% liquidated. But if we have like this perfect mitigation at the 50% and then we make highs or low, another highs or another lows, so then you will take this low as something, a low that will be protected. We will not get through it before making highs, or we will not get through it before making lows for bearish mitigation. That's something that you should take into consideration, because this is happening like really a lot. When we do mitigate the 50%, price will just shoot higher, and then when you have the retracement, it won't take that. This will be protected and it will not be breached or taken. Someone is sharing some porn in Pepe Discord. Sometimes there's really stupid people. So yeah, for DXY, I think that everything that we did in here was to mitigate this. As you see, we traded below, tap it into the 30% of that zone and made lower low. So we expect the 50% to not be respected, and we want the 70% to be reached to, and we have this void in here, so we want to see price go and trade at this area in here, right? So this is a misleading and this is fake. Like, we didn't mitigate the 70%, so every move lower is a retracement of that push higher, so we can get through this. You're going to see the XY reaching that level in here. I don't know how much it will take because this is the daily time frame, but you wanna see DXY trading higher in here, and as DXY trading higher, you wanna see also Euro USD trading lower to some another point that we're going to see. Does anyone of you have some questions or something for what I'm saying? I mean, don't be shy. If you have some questions, just ask it. I'm here, and for the others who are not in the group, you can ask me in here, and not after a week asking me the same question that I have been that I already answered. Yeah. My main setup is not that is my main setup, or it's not my main setup. Is that this is how I read price action. This is how I read the charts, and to take trades or to not take trades, there will be other things, but this is how I read the market, and this is how you will see price delivering the same thing every time, and on every chart, and on every time frame. I'm taking like small minutes or 2 minutes, and I'm coming back. So let's go to Euro USD. So in the Euro USD we have this zone here that put price higher, then we traded lower, traded above at the 70%, then we traded again lower. We can use simply the zone in here, that when we close it below in here, and a lot of times you will see some wicks in here, wait for the closure, and after the closure you will have the retracement, because sometimes you will have some wicks in here on the time frame you're trading. All right, you're on the, I'm insisting on that is on the time frame that you're trading. So you will see price here after closing below, price retraced to the 50% before making another low. So this will become our zone. So we traded below, traded inside the lower part of that zone and made another low outside of the zone. So we expect the 50% to not be respected, and that what happened in here. We tapped in 70%, came back, and that mitigated fully the zone before going outside of the zone, and we may take this low and this low. Maybe let's see what's happening here. you see that in here. After closing below, we traded back to the 50% and had all this drop taking that low. So this will become our zone. After closing below, we tap in the 30% and we are trading lower, so we expect price to come here. Not tomorrow, not the next week, I don't know where, but when you see some bullish price action, expect price to come here. We have this zone in here, and you see we closed it here, traded below 30% because we had some wicks in here, so we're not expecting the 50% to be respected. Then made another high, so this will become our new zone. So after trading above, we came back at the lower part of that zone here, then made another high. So we're going to take this as our zone. So since after we traded above and tapped in on the upper part of the zone, let me rectify this. Be clear to everyone. So we traded above and we came back here, as you see, at the 50%, but we don't expect price to trade only at the 50% and go higher. We want to see price trading here before making highs. And that's what happened here. We came back, we took these highs, and in this we have this low in here, and we have two swing points, and that make this swing a non-structural swing. And what I mean non-structural swing, because this low isn't validated and we made another low which is validated in here. So price will always come to the non-structural swing and make it structural by closing above, like here. We are closing here with this blue candle, we are closing here with this blue candle, and we are mitigating the zones as I showed you before. So for Euro USD, remember that we didn't mitigate fully this zone. Alright, so this move will be considered as a fake move because we went from here to make this low, this candle here, make it structural, right? And then after that we are trading lower. And remember, we have also this that need to be fully mitigated. So we can see this, or we will do this. Depends on the market structure. You can't know which first will be mitigated until you see some things happening like this, or some things happening like this. You know that we're going to take this, go to this, and you know that we're going to this, and you will participate in here, you will participate in here or in here, right? And it's, if the dollar is moving up
the euro is moving down. So if we are considering that DXY need to mitigate this at 70%, it makes sense that we need to mitigate the 70% on the other side. If in the dollar we need to mitigate this, in the euro we need to mitigate this, and it makes sense, right? Let's keep this. And you want to monitor on the lower time frames, what are we delivering, and you want to see the same thing happening on the daily, happening on the hourly chart, right? Okay, let's go to see what's happening in gold. And the gold is really a mess, like literally a mess, because why? We have all of this, like let's say when we close it above in here, we came back to 30% and made higher highs, so we're expecting same thing, this, right? Expecting this to be mitigated, which is it happened on on the war between Palestine and Israel, but let's move. Now that we made another zone in here, we had this zone, that we didn't even tap into before making another highs, right? Then we had this small consolidation, and this on the daily is not even considered as a valid high. So all of this is a non-structural swing, non-structural part of this swing in here. And a lot of times the non-structural swings, for example here on the bullish side, we will take these lows, and if it's on the bearish side, we will take the highs. What happened in here? This one on the 4-hour look, that we closed it above, yeah, so we closed it above, came back, traded higher. We're not going to respect the 50%. As you see here, we traded at the 70%, taking those highs. So if you are trading like the higher time frames, let's say 4 hours, you can, in this situation, you can trade, and you can have like some trade after the tap of the 70%. You can have some trades and target these highs, right? You can have that.
Okay. We can also no. As you see here, traded below, traded at the 30%, traded below. So this is unmitigated, and we're gonna see price trading here also. In gold, I mean, like, there's a lot of we are stuck in this range, taking the lower parts, trading higher, then the highest part and trading lower. Now, if we're going to trade below, we're going to take this and this and this and this. Before coming back, we have this zone here that are mitigated, so we may see some trading below in here and pushing higher. I don't know which high we're going to take, maybe before moving lower, because we have also this in here which is mitigated. And the reason I don't trade gold is that there's a lot of political stuff that drives the gold, so sometimes it will not respect any kind of structure, like here. So yeah, for example, after moving all of this higher here, we had this zone, we tapped in at the 30%, then we made another high, taking this high, then we had this in here, coming back, not tapping at the 50%, but I think we mitigated the hidden S&D in here. Not even so, not even that, but whatever. What I'm trying to say is that a lot of times gold won't give you the move that you want, and like when you have this, a lot of times it won't mitigate it and we'll leave it like for months. So yeah, if we are going to take all of this liquidity in here, all of this price action like this, we may liquidate everything in here, taking this, and we may see some bullish price action starting from here. And since we know that after the DXY, if we reach at that level and start trading lower, we will see some bullish price action for gold. As we have this void in here, which coincides with the 70% of that, 70% of that. So yeah, we went through DXY, gold, Euro USD, ES, and NQ. What's happening on NQ? Yeah, so after the 50%, we delivered a 1-to-1 to the extreme of that zone. And we are trading higher, we may take these highs. And coming back to mitigate that zone. So what you want to see is that you want to see this, this, and this. Or you want to see this, this, and this. And this is where you participate, and this is where you participate. You don't take part of everything happening here. Right? Chris, Bini, 20 miles. Do you have any questions? And Tony?
Thank you.
So 20 miles said that I've been trying to remove. This is the 1 minute. So in 1 minute, thank you. We had Model 3 sweep sell at the open. That the opening, we swept these highs and the sell off. That's the first one. Right, you're good. And Model 1 buy just played out from about 10 a.m. to 11 a.m. We may see this. Or if we are breaching this low in here, so this model is invalid. But you're right. You're right, 20 miles. That's one of and also we had this in here. We traded above, so we don't want only the 50%. We want the mitigation of these levels in here if we're going to take that high, right? But you want to wait and see some bullish price action here before participating. This is the S&D, and this is the same model that you're talking about. This is the SNDR. Yeah, so a lot of times the SNDR will be liquidated. You may take this low. And yeah, so you want to see what's happening here, if we are going to take these highs or we're going to continue down. And you could have take that trade from this zone in here to at least the 50%. If you're trading, like if you are trading, don't go to exactly at the 70%. You're not a market maker, so you wanna trade at least to the 50%. Or if you're seeing some bullish movement at the 30%, you wanna leave also, because a lot of times it will just trade at the 30% and go and come back later, right? You're welcome, buddy. A lot of people were here, they went, and I think that it's the time to end the stream. For the group, we'll see you on Sunday. Let's make it 10 a.m. Alright? Right, Chris? You see some kind of trap in here at the 50%. We may deliver from here to the extreme. We may do that. But anyway, I'm leaving you guys. See you on Sunday. Take care.
Thanks.
Thank you, Bini.